Good afternoon, everybody, and thank you so much for joining us today for our webinar on long-term care planning. This is what we're going to be covering, and this is our panel that we've got with us. My name is Kristen Mackey. I am the Community Relations and Outreach Program Manager for WA Cares at DSHS. And I'm going to go through the panel now and ask each of our folks to briefly introduce themselves. So Mary, let's start with you.
Good afternoon. My name is Mary Mitchell, and I'm the Director of Aging and Disability Services and serving as the Area Agency on Aging Executive Director for Seattle and King County. Thank you.
Thank you so much. And Annie.
Thank you. My name is Annie Mua. I'm the Home and Community-Based Waiver Program Manager with DSHS's Aging and Long-Term Support Administration under the Home and Community Services Division.
Thank you. And Kathy.
Hi, I'm Kathy McCall. I am the Advocacy Director for AARP here in Washington State. We have roughly 900,000 members in the state and look forward to the conversation.
Thank you so much. And Sharon.
Hi, my name is Sharon Daniel, and I am a Senior Compliance Analyst with the Office of the Insurance Commissioner in our Consumer Protection Division. And I will be talking about what is long-term care insurance. Thank you.
All right. Thank you all so much. We really appreciate your being here to help us talk through this topic. We know there's a lot of complexities and a lot of angles on this. So we're going to get started with a quick opening poll. If we've got it loaded. Sam, is that? No, thank you so much. So if you can just take a quick minute to answer the questions on your screen, that will help us understand a little bit more who we've got in the audience today. Great. And you can see the results on your screen right now. Thank you all for answering those. It looks like we have our biggest contingent of people here today between 50 and 59, which is a great time to be doing some long-term care planning. And then we are going to go ahead and get started with our presentations. We will have some time for Q&A at the end, but if you think of your questions earlier, then you can go ahead and drop those in the Q&A function. We will, to answer a FAQ for many of our webinars, we will have a recording of the webinar and the slides posted on our website after the webinar is over. And we'll have that link at the end of the presentation, and maybe we can drop it in chat so that you can find that. All right, Mary, I'm going to go ahead and hand it over to you.
Thank you. Good morning. Again, my name is Mary Mitchell, and I'm the Director of Aging and Disability Services, Seattle and King County Area Agency on Aging. And today I am representing Generation X. And if you know the Kangol and the gold chains, it's DMC. So that was our era. And I am so honored to be here with this amazing, knowledgeable group of people today. And I'm here to provide context for our conversation, specifically around what is long-term care, where can folks receive long-term care, and where you can go to learn about your options. First, when we talk about long-term care, we are referring to assistance with activities of daily living. The things we do every day to get through the day, such as eating, dressing, bathing, personal care, shopping, and transportation. As some of us face challenges related to chronic illnesses, physical disabilities, or cognitive impairment, we may need help with these daily activities. Next, where can folks receive long-term care services or help with activities of daily living? Most people prefer to receive services in their homes and communities they love. Washington State has been leading the nation to ensure both client choice and cost-effective quality care in home and community-based settings. AAAs help connect folks with a range of services, from transportation to your local senior center, where you can participate in a wellness program, eat nutritional meals, and engage with others. Even lots of fun dancing, as we participated in a disco party last night. To have caregiving come into your home to help with personal care needs, long-term care is also available in residential settings, including assisted living communities, adult family homes, and skilled nursing facilities. So finally, where do we go to learn more? Next slide, please. Washington State has a toll-free number you can call to access the network of providers we refer to as Community Living Connections. And that number is 1-855-567-0252. The Community Living Connections call center can provide you with information about available resources and direct you to your local AAA for more hands-on support to accessing those resources. You can also visit their website at washingtoncommunitylivingconnections.org. And now I'll hand it over to Kathy McCall with AARP Washington. Thank you.
Thank you, Mary. You've always been such a great partner and always great to work with you. Good to see you. So for AARP, long-term care is our priority. I like to say it's priority number 1, number 2, and number 3. And part of that long-term care system that is overwhelmingly the most important aspect of long-term care are family caregivers. So at some point in everyone's life, you will either be a caregiver, you will need care, or you will be caring for somebody else that maybe is a non-family member. So there's roughly 828,000 Washington residents who are caring for aging parents, spouses, and other loved ones. AARP has done some analysis and looked at basically, if you had to pay for that service, it would be about $10.7 billion in unpaid care. So about 5 times what Medicaid spends on long-term services and supports. We also know that family caregivers spend a huge amount of money out of pocket to provide care. And more than 50% of unpaid family caregivers have had to take off work, which impacts not only their work performance, but also their ability to save for their own retirement. About 1 in 6 people leave the workforce early because of caregiving. And the demands of unpaid family caregiving can contribute also to the generational poverty of a family. Next slide. So the cost of care and why AARP has been a strong advocate for WACARES is really the cost of care and the cost burden to families. There are really limited options when it comes to providing your own long-term care. If you are higher income and you can afford long-term care insurance, great. But less than 10% of the population can afford long-term care. That means that they have to rely on Medicaid, which means that they often have to spend down their assets. There's also pretty strict look-back periods for eligibility for Medicaid. And long-term care is expensive. I have 2021 data here. That's $9,000 a month or $4,500 for a 1-bedroom in assisted living. And a home health aide can cost $5,000 or more per month. So again, Walk Cares, while it's not necessarily the ideal perfect solution, it helps families take a breather. It helps them plan for the future and plan for what type of care will be available to their loved one and how they can best help their loved one receive the care that they need as they age. Next slide. So we have some AARP again. We have some incredible resources. If you're currently a caregiver or you know someone that is providing care, aarp.org/caregiving. We also have aarp.org/WA, which is also our state website. And then, as Mary mentioned, Community Living Connections, but also the incredible work that ALTSA under DSHS has done. ALTSA stands for, is the program that works with older adults within DSHS. And again, a great resource AARP has created is called Prepare to Care. You can have that as a booklet mailed to you, or you can access it online. Thank you.
Thank you, Kathy. And next we are going to go to Annie.
Thank you. So I'm going to talk about Medicaid long-term services and supports. Next slide. So what services and supports are available through Medicaid? Medicaid long-term services and supports are intended to enable individuals to remain in or return to their communities through the provision of coordinated, comprehensive, and economical home and community-based services. There are 3 programs that Medicaid services and supports, ways that can be accessed. These are the Medicaid state plan, Medicaid waivers, and then other Medicaid. Today, I'm going to focus on the Medicaid state plan and the Medicaid waivers, but to give you an idea, other Medicaid includes federal grants and state-funded service packages. Next slide, please. The Medicaid state plan programs came from the Social Security Act, required that states offer mandatory and optional services, and the development of the state plan is Washington's agreement with the Centers of Medicare and Medicaid to adhere to those requirements of the Social Security Act. Washington has 4 Medicaid state programs. They're private duty nursing, program of all-inclusive care for the elderly, or considered PACE, Community First Choice, or CFC, and Medicaid personal care. Today, I'm going to focus on the Community First Choice and Medicaid personal care. For Community First Choice, an individual must functionally be eligible for nursing facility level of care, or NIFLOC, and the individual may receive services in their own home, adult family home, adult residential care facility, enhanced adult residential care facility, or an assisted living facility. Services under the Community First Choice include personal care, which is the one that you'll most likely access, and those are going to help you with your activities of daily living, but also nurse delegation, skills acquisition training, personal emergency response systems, assistive technology, community transition services, and caregiver management are all other services under Community First Choice. Another program under, can we go back? Another program under the state plan is that Medicaid Personal Care, or MPC. To be functionally eligible for Medicaid personal care, an individual meets non-nursing facility level of care, so a lower acuity level of care. And these services are only available in your own home, adult family home, or an adult residential care facility. Services under Medicaid personal care are much more limited than community first choice, and they include personal care and nurse delegation. On the bottom of this screen, you'll see there's a little key for some of those acronyms. Next slide, please. So moving on to the waivers. So what are Home and Community Services 1915C waivers? Unlike the programs under the state plan, waivers are not entitlement programs, meaning there are specific eligibility requirements to access these. We have three 1915C waivers, and they are COPES, which is one of the oldest waivers in the nation that began in 1982, and provide wraparound services to Community First Choice, which was under the state plan. New Freedom, which began in the early 2000s and is available in King and Pierce counties, and this is a participant-directed program. And the third waiver is the residential support waiver. And this began in 2014 and provides services for individuals with complex behavioral needs. Depending on which waiver an individual is eligible for and chooses, some services may include home delivered meals, behavioral supports, community choice guiding services, transportation, environmental modifications, and specialized medical supplies. Next slide, please. What are Home and Community Services 1115 waiver programs? 1115 waivers allow states to be innovative and demonstrate new services and programs using Medicaid dollars. So Washington's first 1115 waiver programs began in September 2017, which was the MAC, which is Medicaid Alternative Care and Tailored Supports for Older Adults, or TSOA. These two programs provide services and supports to unpaid family caregivers who are supporting care receivers who are usually not yet financially eligible for Medicaid. And then two other services under the 1115 waiver is supported employment and supportive housing. Next slide, please. So how do you qualify? Individuals must meet financial and functional eligibility in order to qualify for services. Functional eligibility is determined by case managers, and financial eligibility is determined by Home and Community Services financial workers. Okay. So to be eligible for long-term services and supports, a person must have a Social Security number, be aged, blind, or disabled, a citizen, and like I said, financially and functionally eligible. At the bottom of the screen, underlined, is a link for more information on income and resources to be eligible. Next slide, please. So what is the care assessment? So the care assessment is the tool used to assess the personal care needs of an individual requesting services and develop a plan of care. And this is going to help determine functional eligibility for the Medicaid long-term services and supports. It will identify a classification group and then the benefit level and payment options for providers. Things that are looked at to determine functional eligibility include the physical functioning, cognitive functioning, medical history, medication management, behavior support needs, and then always clients' preferences and goals. Next slide, please. Where can more information be found? For a Medicaid long-term services and supports application, you can go to any of these links, or to find the application, you can print it out and send it in. You can complete it online, or you can call the phone number on the screen to apply over the phone. Next slide, please. And then one last resource here is the Medicaid and long-term services and supports. The blue there is a hyperlink, so you can click on that link to this booklet. And this is a comprehensive booklet for individuals who are exploring using Washington Apple Health long-term services and supports or Medicaid. And it'll help you understand how to apply, income and resource eligibility limits, in-home and residential care service options, and then resources for unpaid family caregivers. Next slide. Thank you.
Hi, so now we are going to talk about private long-term care insurance and what it is and what you need to consider when buying insurance. Next slide, please. Okay, so what is long-term care insurance? Well, basically, it's insurance and it helps to pay with activities of daily living. We discussed earlier what those activities of daily living are, such as eating, bathing, dressing. It helps to pay for medical, personal, and social services for people with prolonged illnesses or disabilities. It also covers a variety of settings, such as your home, nursing home facilities, assisted living facilities. There's so many facilities out there right now. So you do have to make sure that facilities that you're interested in are covered under the policy. Next slide, please. Okay. So when you're shopping for a policy, you want to make sure that you ask yourself if you need long-term care insurance. Well, it would depend on your age, your health, some overall retirement goals, your income and assets. You also want to make sure that you understand what the policy covers and what it does not cover. Some policies don't cover assisted living facilities. Some don't cover adult family homes. So you want to make sure that that you know the types of facility that are covered, what the limits and the exclusions are, and what the cost is. Next slide, please. You also want to make sure that you buy enough coverage. Your average person will probably need about 3 years, and we recommend people buy a minimum of 3 years of long-term care insurance. You also want to make sure that you buy from a licensed agent, agency, or company. And you also want to check their financial stability. A lot of long-term care insurance companies, they see premium rate increases year after year. And so some of them are struggling financially. You can check the financial stability from independent agencies, and you can also find those agencies as well as companies that sell long-term care insurance on our website. Next slide, please. So when you're looking for a policy, you want to make sure that you ask the company about their history of premium increases. Past history shows us that premiums will continue to rise. Premium increases are a problem with long-term care insurance, and this is a problem across the state as well as the entire nation. It's not just specific to Washington State. And you need to make sure when you purchase a policy that you can afford the policy now, but you want to be able to make sure that you can afford it in the future as well. It's not the best fit for everyone. They can be very expensive. So you need to look at your current income, maybe talk to a financial advisor to make sure that any rate increases can be affordable to you. So next slide. So some of the common terms you need to know when you're looking for a policy are the benefit triggers. This is the criteria that companies use to determine whether or not you are qualified to receive benefits, such as a cognitive impairment, or you need assistance with daily activities, or a doctor might say that you need care. These are the triggers that would tell the insurance company that they need to start paying out long-term care insurance benefits. Next slide. Insurance plans will have a monthly benefit limit or even a weekly or daily benefit limit. So you'll want to check what the limits are on the policy. They also have what is called an elimination period. This would be the equivalent of a deductible. This is the amount of the period of time that you will have to pay for your own services out of pocket before the company will pay. The shorter the elimination period, the more costly the policy. So bear in mind that if you have a very short elimination period, the premiums will be much higher. Next slide, please. We encourage people to ensure that they have an inflation protection on their policy. $100 today may not buy the same amount of long-term care as $100 5 to 10 years from now. The inflation protection will make sure that that benefit increases with the increase of long-term care. Insurance policies also have what is called a maximum benefit limit. They're only going to pay out a certain amount of money, or they're only going to pay out for a certain amount of time. And so you want to make sure that you have enough funds to cover yourself after you've reached the maximum benefit limit. Next slide, please. Okay, so on our website, www.insurance.wa.gov, you can order our long-term care options workbook. It's a wealth of information. It talks about the different options for paying for long-term care, as well as long-term care insurance. And it also has the ability to do some math to find out exactly how much coverage you need and what your resources are. You can also call our consumer hotline, 1-800-562-6900, and we can answer some basic questions about long-term care and point you in the right direction. And we can also mail that booklet to you if you don't have internet access. Next slide. And that is my contact information. We are on Facebook, Twitter, and www.insurance.wa.gov. Thank you. Next slide. There we
go. Thank you so much. Okay, now we're going to go into a brief overview of the Walk Yours Fund and how that program works, how it'll fit into your broader long-term care planning. And then we will go to Q&A after that. So let's start by just giving an overview of the Walk Yours Fund. It is a long-term care program in Washington State for Washington workers. It's an earned benefit, which means that you contribute for a certain number of years in order to earn your benefits. And it is entirely self-funded from worker contributions. Those go into a dedicated trust fund that's used only for this program. Workers contribute 0.58% of each paycheck to Walk Yours. And you can see at the bottom left what this looks like for the typical worker who makes just over $50,000 a year and would contribute $24 a month or less than $1 a day. You only contribute to Walk Yours while you're working. Contributions stop when you retire or if you become unemployed. Everyone is covered at the same rate, regardless of pre-existing conditions. And when it comes time to claim your benefits, there are no copays or deductibles, and you don't need to file claims and pay upfront for services and hope to get reimbursed. Instead, we connect you with contracted providers who offer the services that you want and pay them directly. Contributions to Walk Yours began in July of this year, and benefits will become available in July of 2026. This is what those contributions can look like over the course of a career. The typical worker's income that we talked about is just about at the level in green here in the middle. And you can see that $290 in contributions each year totals out at $8,700 over 30 years. Almost all Washington workers contribute to Walk Yours. We use many of the same definitions as paid family and medical leave, including the definition for whether someone counts as a Washington worker, which is whether your work is localized here. So essentially, as a general rule, if you as a worker are included in paid leave and you do not have an approved Walk Yours exemption letter from ESD, from the Employment Security Department, then you'll be included in Walk Yours. The workers who are automatically not included in the program include, again, folks whose work is not localized in Washington. These workers do not need to apply for an exemption in order to not participate in the program. And then federal employees are also not included in Walk Cares. There are a couple of opt-ins. So folks who are an employee of a tribal business are only included if the tribe has opted in. And self-employed individuals similarly are only included if they choose to opt in. Then we have a few different groups of workers who are able to get an exemption, and they must apply to the Employment Security Department, or ESD, in order to get that exemption. Some workers can apply for an optional exemption based on meeting certain conditions. So that's our first three here. That's workers who live out of state, temporary workers with non-immigrant visas, and spouses or registered domestic partners of active duty military members. And these three groups of exemptions were created for groups of workers who would be unlikely to qualify for or be able to use their Walk Cares benefits. They are available on an ongoing basis, and they are conditional. So the person must continue to meet the exemption criteria in order to maintain their exemption. There are also two types of permanent exemptions. So one is for veterans with a 70% or higher service-connected disability rating. These are folks who have access to some nursing home care through the VA, and they can choose to apply for a permanent exemption. Those applications are available on an ongoing basis. There was also an exemption available for workers who had private long-term care insurance before November 1st of 2021. These applications are no longer available, and under current law, workers who already have an approved private insurance exemption will continue to be exempt permanently. If you are self-employed, you can choose to opt into the Walk Cares Fund and protect yourself with the same affordable benefits that are available to other Washington workers. Like other workers, you would contribute 0.58% of your earnings, and that includes your net earnings and any gross wages paid to you from your business entity. To earn benefits, you must work at least 500 hours per year. And for self-employed people who choose to elect Walk Cares coverage, that's calculated by dividing your gross annual wages by the current minimum wage. Applications to opt in became available in July, and you can learn more on our website at walkcaresfund.wa.gov/opt-in. Let's talk about how to qualify for benefits. So the first thing that you need to do in order to get benefits is to meet contribution requirements. Everyone who is contributing to Walk Cares Fund more than 500 hours per year is earning benefits, including part-time and temporary workers. And by contributing for a certain number of years, you can access the benefit. So there are three pathways to do that. The first is early access, and this is for workers who haven't yet been able to earn lifetime access, but have a care need either while they're working or soon after leaving work. And to qualify for this pathway, you need to have contributed for at least 3 of the past 6 years at the time that you need care and apply for benefits. The next pathway is lifetime access, and this is the pathway that we expect the majority of Washingtonians will use to qualify for benefits. So for this pathway, you must contribute for a total of 10 years without a break of 5 or more consecutive years. And then finally, we have a special pathway that is just for people who are near retirement. So if you were born before 1968 and are therefore getting close to retirement as the program begins, and unlikely to be able to qualify for that 10 years pathway, you can still earn partial benefits for each year that you work. So you earn 10% of the full benefit amount each year. And if you work and contribute for 500 hours or more each year for 3 years, you'd earn 30% of the benefit amount, or just under $11,000. New retirees have permanent access to whatever percentage of the benefit amount they earn at any time that they need care. And they are also able to qualify through one of the other pathways if they meet those requirements. Once workers have met contribution requirements and need help with at least 3 activities of daily living, they can get access to a $36,500 budget for services and supports. And that benefit amount will increase over time with inflation. With walk cares, workers really get flexibility to choose the services and supports that meet their needs that they want to have. So that could mean in-home or residential care, but it could also include things like home modifications to make your home safer, assistive technology for things like medication reminders and fall detection that can help with some care needs. Walk Cares is really designed to help people age in place in their own homes as long as possible. That's what almost all of us want to do, and most people are able to do that if we have the right supports in place. Walk Cares also has many options that help provide support for family caregivers. You can choose someone who would otherwise be caring for you on an unpaid basis to get training and be paid, even your spouse. And Walk Cares can help lessen the impact on family caregivers that Kathy was talking about earlier, either by paying them for their time or just by making sure they can get other support services. Under current law, you must be a resident of Washington State to use benefits. However, the Long-Term Services and Supports Trust Commission, which oversees Walk Cares, has recommended to the legislature that benefits be made portable for people who contribute to the program but leave the state before they need care. And so we are waiting to see if the legislature will take action to make that change. We get asked a lot about how far the benefit will go. And it won't cover 100% of care for everyone, but it could cover the amount of in-home care that the average Medicaid client uses for about a year. So for some people, about a third of people need care for a year or less. For those folks, Walk Cares, depending on the services they choose, may be able to cover all the care that they need. And for others, Walk Cares really provides the family with immediate relief and time to plan for future care costs. So these are some examples of how someone might use their benefit. You could pay a family member to care for you about 10 hours per week for 2 years and get care supplies. Or you could choose services to help you stay safely in your own home. You could purchase $15,000 worth of renovations like bathroom modifications or a wheelchair ramp to improve your home's accessibility. You could get a wheelchair or scooter and have meals delivered for 3 years. Or someone who needs long-term care due to an unexpected injury could get 20 hours of in-home care per week for a year, plus transportation to appointments and crutches. So these are just a few examples of ways that you might combine the benefits that are available through Walk Cares. And if you'd like to learn more about the benefits that are available that we cover, you can visit walkcaresfund.wa.gov. And with that, we are going to go ahead and go to audience Q&A. So please go ahead and drop your questions in the Q&A box if you have questions for our panel. And we are going to sort through these and let's see. So first we have someone asking whether there is a cap on Walk Care's contribution income. No, there's no cap. It is just that proportional amount, that percentage of your income, no matter how much you make. Then we've got someone asking if you're exempt from Walk Cares and apply for paid family and medical leave. Will your exemption be voided? And no, those programs operate separately. Employers do report the information and the premiums from those programs together, but in terms of things like exemptions, they operate separately. And then we've got someone asking whether all long-term care vendors are going to be contracted to accept Walk Cares, or will there be fewer options than on the open market. That's something that we are working on right now. We do need providers to be contracted with Walk Cares in order to provide services. So that is really because we want to make sure that folks are licensed and have whatever qualifications are required for that type of service in order to be able to provide care. So we are working on developing our provider network and working to make sure that there are plenty of providers available for all of the different services that we offer when folks need care starting in 2026. Then let's see. We've got someone asking, Sharon, about private long-term care providers and whether they are still in the state, or what WACARES or the Washington State is doing to reverse that. So I don't know if you can address that for us.
Sure, I'll certainly try. So a couple years ago, when there was the exemption period for WACARES, there was the mass attempt to buy insurance. So a lot of the companies stopped selling for a while, but they are coming back because of the ongoing increases in long-term care in general. A lot of companies are moving towards a hybrid policy, and that would be a long-term care rider attached to a life insurance policy. So that tends to be the direction that a lot of the companies are taking as well. I do know that there is talks of a long-term care supplement policy that is a long-term care insurance product that would work in conjunction with WACARES, and that is expected to be the legislators are expected to look into that this session and possibly submit a bill regarding that. So long-term care is definitely a hot topic.
Thank you. All right. And then we've got someone asking whether Medicaid is an option while on the long-term care, the WACARES benefit. As a general rule, Medicaid does require, if you have other payers, so like if you have private long-term care insurance, or if you have, for example, the WACARES benefit, that those are exhausted first. So as a general rule, WACARES would be the first payer, and then there would be a transition. If you get to the end of your WACARES benefit, you still need services, and you're able to qualify for Medicaid, then you'll be able to transition from WACARES onto Medicaid in order to continue receiving services. Then we've got, let's see, we've got a couple folks asking, you know, what happens to the money if you are, for whatever reason, whether you under current law move out of state, or if you just happen to, you know, die before you need care, what happens to your WACARES contributions? And it really helps to think of the program like an insurance program rather than a savings account. So that's how we're able to keep premiums at a really low rate, is by all of us contributing that small amount of our income throughout our careers, and then the folks who need care are able to access their benefit. And then let's see. We've got someone asking if there will be a cost of living adjustment on the benefit to combat inflation. And yes, that benefit amount will be adjusted on an annual basis for inflation. We've got someone asking, saying that they retire in early July of next year, and wanting to know what happens to their WACARES contribution. And for those folks, I'm gonna guess, depending on the number of hours that you work, you're probably going to actually work, as long as you were born before 1968, you probably will have worked enough to earn a partial benefit through that near retiree pathway that we talked about. So let's say that you work 500 hours per year for the rest of this year, and even for next year as well. You could have, you know, depending on how it works out, either 10% or 20% of the full benefit amount available to you later in life when you need care. And we've got someone saying that they live out of state, but their job is in Washington. And if they move back, will they be able to access this program? So if you live out of state but work in Washington, then you can choose, if you would like to apply for an out-of-state exemption and not contribute to the program. But if you know that you want to move back into Washington at some point in your life, and you think that that's something that you'd like to contribute to and have that benefit available, then you don't have to apply for that exemption. You can contribute to the program, and as long as you meet the contribution requirements, then yes, later when you live in Washington and need care, you will be able to access benefits. And then we've got someone asking about the mention that we don't have a deductible and how we would characterize, you know, that folks will have some time between when they first apply for benefits and when we've been able to assess their eligibility and get them set up with WellCare's benefits. And really, when we talk about no deductibles, that just means that, you know, there is a delay. We do have to make sure for fraud reasons that folks have met the requirements and are really eligible for benefits. We're working to make that process as quick as possible. But once you have been able to meet those qualifications, then there is no amount that you have to pay out of pocket first. And there are some, for example, private insurance plans where no matter what, you have to pay a certain number of days out of pocket before you are able to access care. It's not just a time that you have to wait, but you actively have to be paying for that care. So that's the contrast that we're trying to draw there. And then we've got someone asking if we have private long-term care insurance and WellCares, can they access both at the same time, or is one the primary payer? And as a general rule, you can use the two programs together, and actually WellCares can work really well as essentially covering that waiting period that some private insurance plans have, that most private insurance plans have, where you have to be paying out of pocket. We're actually working right now to develop a supplemental private insurance market that would be private insurance plans that are specifically designed to work seamlessly with WellCares and, you know, require that, for example, if you have a provider who you've been using while you're using your WellCares benefit, that once you are done with your WellCares benefit and have moved on to your private plan as the primary payer, that you're able to transition and use that same provider and continue to have those services seamlessly. So they can work really well together, and WellCares can help cover kind of that first time period when your private long-term care insurance hasn't kicked in yet. And then we've got someone who's asking, saying that they will be moving to Washington soon, but work for a company outside of Washington, and asking if they will be contributing to WellCares after they move. Likely, yes. It depends on whether you are working in Washington, if your work is characterized as being localized in Washington. So it's a little bit of a complex definition, but your employer should be able to help answer that question because they are determining, you know, whether you're participating in paid leave, whether you're participating in WellCares. Then we've got someone asking, let's see, we've got someone asking whether some of the details of WellCares could change. Could the payroll percentage change? Could the benefit amount change? Yes, the legislature is always able to make changes to the laws if they see fit. Luckily, though, we have had some modeling done to determine how long the program will be solvent, like to make sure that we're able to, you know, that we have plenty of money to continue paying benefits over the long term. And that research has indicated that we are good to go at the current premium rate. So there shouldn't be a need to, for example, raise the percentage that folks pay in for WellCares contributions. We've got someone asking, can you talk about the Washington State Long-Term Care Partnership Program? Sharon, is that something you might be able to speak to?
Yes, the Washington State Long-Term Care Partnership Program those are basically long-term care insurance products that protect you against the Medicaid assessment It can get a little bit complicated. Basically, though, if your partnership policy pays, say, $200,000 in benefits, then you have $200,000 of assets protected from Medicaid. And that honestly is about all I know.
All right. Okay. So we've got some folks asking if someone is a partner in a business, whether their net income will be taxed if the other partner wants to opt in. So business owners who are considered to be in a partnership, LLCs, sole proprietors, or independent contractors are considered self-employed, and they need to elect to opt in to participate. And that would be on an individual basis, not as your partnership. There are folks, though, who are corporate officers of a corporation, including like S-corps, where even if they are the owner, they're paid wages from the company that they work for and are therefore considered employees. And those employees do contribute to Walk Cares. If you are at all unsure about, how it applies in your specific situation, this is stuff that can get pretty complicated. So I'm going to go ahead and drop a link in the chat to our contact page. If you reach out to ESD, to the Employment Security Department, they are the ones who manage the employer reporting and work with folks on self-employed opt-in, and they will be able to help you answer the question kind of as it's in the details of your specific situation. So Sam, it looks like I'm not able to drop in the chat to everyone, but if you could put the contact us link in there so that folks can see the email form and the phone numbers that they can use. Let's see. Okay, I think that is bringing us very close to the end of our time. We've got some folks asking about the recommendations to the legislature that the LTSS Trust Commission is putting together right now. So again, the LTSS Trust Commission is our oversight body, and there are a few things that they are recommending, making recommendations to the legislature on this year. They did have a recommendation report last year that included a number of different recommendations, including the original recommendation on how to make benefits portable and what the details of that would look like. And the legislature hasn't taken action on that report yet, but there will be a new report at the end of this year. And the three areas that the commission is working on are portability cost offsets. So since the program was not originally designed to have portable benefits, then if those folks are going to be able to access benefits, we need to figure out how do we offset the cost of paying for those portable benefits. And then they are also looking at minimum provider qualifications. So what makes you qualified to be a Walk Cares provider? And they are looking at benefit eligibility. So I know we've also got some questions in the Q&A about specific activities of daily living, how some of the determinations will be made on whether you are eligible for benefits. And all of that is going to be included in the LTSS Trust Commission's report at the end of this year. And if you are interested in learning more and seeing the report when it comes out, I would recommend that you go to our website and sign up for our monthly newsletter, and we will make sure that a link to the report is included in the newsletter once it is publicly available. And I think that brings us to the end. We've got someone asking again whether the slides will be posted on the website, and yes, they will be available on the website let me go ahead and move us forward, at walkcaresfund.wa.gov/webinars. We will also be posting the recording. if you want to go back, or for folks who weren't able to watch live. We also want to encourage you to follow us on Facebook, Instagram, and LinkedIn. We also have a YouTube account that we post to. And these are often the places where we post new updates and information first. So we'd love to see you on our social media. And then if you still have questions, we will be available, our customer care team, at the phone numbers that are on your screen. And again, that contact us page on our website has an email form that will route your inquiry to the right agency, and those phone numbers and details as well. And that brings us to the end of our webinar today. Thank you to our panel for joining us. We really appreciate your time and sharing your expertise on this topic. And next month, we will have a webinar on talking with loved ones about long-term care. So we would love to see all of our attendees there for that webinar as well. And you can sign up for that on the webinars page as well. So thank you all so much for joining us, and have a great afternoon.
Thank you. Bye-bye.